Hey, good afternoon. Today is June 21st, 2022. We're looking at a 2000 tick chart for the E-mini S&P 500 futures market. We've got a 21 EMA indicator here in blue, 9 EMA here in cyan, 200 EMA indicator in magenta, and we've got a MACD indicator down here at the bottom. But we primarily focus on using technical analysis, price action, and overall market context in order to enter our trades. Take a second, real quick, like the video, subscribe to the channel, turn on post notifications so you know exactly when I post this content. Not much going on yesterday with this price action. I didn't even bother trying to make a video, but happy Father's Day to all the fathers out there. I hope that you guys enjoyed a nice weekend with your families. But anyway, I want to get right into it for today. I do need to start off by saying I have been very busy recently. It's been hard trying to put out content and videos every day, but I do want to focus a little bit more on quality over quantity. So know that the videos that I put out, I'm putting a lot of effort into them. I don't want to just put out videos just to put out videos. I've got a lot of things coming up in my life. At the moment, I'm working on a series that I'm calling Back to the Basics. That's essentially going to talk about how I set up my chart, as well as explaining some of the basics on trading, futures, how to get started, what kinds of things I look for, and it's going to be completely for free. It'll be coming out next month. I'm anticipating every Tuesday and Thursday there will be a new video. So I hope you guys are excited for that. I'm very excited for it. That's something additional I've been working on behind the scenes. But yeah, anyway, let's get right into it for today. As we normally do on this channel, marking level of resistance up here at overnight highs, level of support down here at overnight lows. And as the market opens, we get prices that start to push up. This channel that we have is a little bit preemptive. That's not what I was looking at before. I was kind of looking at the smaller channels that we're working up, with a break move to a new high to test this resistance level up here at the top. I was potentially looking to catch stops once we had this nice signal bar here. This was a second entry short off the resistance level of these overnight highs, but prices are continuing to move up in a nice uptrend. MACD is showing all this bullish momentum as the market has opened. I restarted my count right here when prices kind of came to test the 21 EMA again. We have nice separation between 9, 21 EMA. As prices come up and down, that's a first entry short, and as prices push up and down, second entry short, you have your stop limit order one tick above this signal bar right here, and on that, by that third bar, you're in that trade. Stop loss is going one tick below this signal bar, and as prices continue on, you're in this trade for just a second before prices come up. You get that scalp. I was a little bit worried of how the day was going to go when I started seeing these overlapping bars. I was a little bit worried for choppiness that we might see. Maybe we saw a little bit of consolidation here, but prices are trending in a direction, and that's what I like to see when I'm taking those trades. Now, as prices started to come back, that's when I started looking for a bigger channel. I really thought prices were going to continue moving up. Now, for those that might see it, you could potentially say we have somewhat of a range at play here, as the 9 EMA, 21 EMA are somewhat flattening out. You get overlapping bars here. I mark this as an aggressive trade, but if I saw this range at play, we have plenty of room up to the highs. If prices hold here, this bigger channel could be validated. 200 EMA is additionally coming up as well, and MACD wasn't necessarily in our favor, but I like that signal bar. I ended up taking that, just enough room to get out for a scalp. Now, if you don't end up taking that, you could potentially look at catching stops. Now, how are you starting the count here? Well, what we're looking for here, technically, according to this indicator, the count is restarting from the lowest low as prices come up and down for a first entry short. Then prices continue pushing up, down for a second entry short. If it triggers below this bar, immediately triggered and reversed, your stop limit orders going one tick above the signal bar. And as prices reverse, you catch all those stops, ride that momentum up for the scalp. Now, the reason that I kind of like where I started the count there is because I'm also seeing what the MACD is doing. The MACD is crossing over here. If we restart the count right here, prices would have came up. That would have been a first entry short. So you'd be calling a first entry short as the momentum continues to build up. And so the way I did it this time is kind of looking down here at the MACD. I was saying, okay, we're starting to get the crossover here. We have this new low. We had our first entry short. Then prices are moving up again, looking for that second entry short to trigger, and then catch stops and ride that momentum up for the scalp. We had continued separation between the 9 and 21 EMA as prices held at this bigger channel. Now, for those that don't want to take that trade and they restart the count here, prices came up for a first entry short, prices came up, down for a second entry short. Your stop limit order is going one tick above the signal bar here to catch stops if prices reverse. But by the third bar, if you're not into that trade, you got to remove your order. You can additionally see MACD is starting to peak as that momentum comes back down, and then prices kind of start to hold in this range. Prices came up and then down again, making nearly a double bottom with this congestion here. That's when you're drawing a range at play. You have a new high up here as prices come down for a first entry long. Prices pull back on the 21 EMA before finishing nice bullish bar here, entering one tick above that bar. Plenty of room up to the highs here. That's just a standard, you could say it's a second entry long, higher low opportunity. You have enough room to get out, and there's the space. What I liked about it additionally is that this bigger channel continues to hold those prices. MACD is in bearish territory, but the other way you can kind of see it is the bearish momentum is being lost. As the next bar prints, you see that bearish momentum start to lose. So if you're losing that bearish momentum, you could potentially ride that up for the scalp if you analyze it that way. Now, if you didn't like that opportunity, you could potentially enter on a higher low. That's exactly what happens. You have a low here, this swing has a higher low, and then this swing here has a higher low, even if it's just by one tick. Prices hold above the 21 EMA here. You have this new high as prices come down and up for a first entry long, prices pull back, second entry long opportunity, but I marked it aggressive for a few reasons. One, MACD is still showing that bearish momentum. We didn't necessarily get a crossover. We are in this trading range here. You don't necessarily have a lot of room to the highs. And finally, the signal bar is pretty big. It's 15 ticks. You'd be risking a lot if you're putting your stop one tick below this signal bar here. You're entering in the middle of the range. It's kind of why I marked it as aggressive. I didn't like it too much. Prices do break off the top though, looking for prices to pull back and maybe hold. And they do somewhat, but you're not looking to take a higher low here. I guess you could mark it as an aggressive one, but I'm not a big fan of breakout pullbacks. I don't find them as reliable, but I will mark it as aggressive. We continue to see the separation between this 9 and 21 EMA. They never cross over here. So maybe you take that trade. Prices continue up here. Are you going to take a higher low opportunity once you start to see bars stacked? I personally didn't like any of that. But now by this time, you see we have another higher low, and that's when I'm starting to draw this bigger channel here as prices hold yet again. So as prices come down here, I marked it as aggressive. I didn't take this trade. I wish the signal bar was a little bit more bullish, but you could potentially enter here, maybe wait for a trigger and try and enter on a limit order. You have plenty of room to the highs as prices are making higher lows and they're making higher highs. So maybe you enter this. You would have been out for a scalp, but I did mark it as aggressive. Prices do chop around a little bit. I don't have it drawn, but you can kind of see we have another somewhat of a range at play before prices push back down and they break out the bottom, only to break out pullback to the bottom level of this range. Here's a failed second entry long, not looking to catch stops below here, but additionally not looking to go short below this doji bar. I was looking for a lower high opportunity, but this bar finished bullish. If it finished bearish, I would have looked at entering short here. We did finally have a crossover between this 9 and 21 EMA, as MACD is additionally showing this bearish momentum. But because that bar finished bullish, I didn't end up taking that trade. Now, prices kind of came all the way down here and then came up and down again, kind of making a double bottom. I just preemptively started drawing this trading range here. As prices came up to test this 21 EMA, prices tried pushing up and then immediately reversed, came back to close below this 21 EMA. It's an aggressive one because you can see bearish momentum's kind of being lost. MACD is about to cross over, but I had this trading range at play here, plenty of room down to the lows, and prices immediately fell through. Once I saw prices kind of bounce off of here, that's when I'm drawing this bigger channel at play. So realistically, before, that's not really what you're looking at. You don't see the top level of this channel unless you're quick enough. Maybe you get a line in here and you kind of like, okay, well, maybe I'll take that risk there. You have a key entry point, resistance level of the channel, resistance level of this trading range, 21 EMAs coming as well. The MACD is just not on your side there. But prices continue to push down. And what we find with this channel is that prices hold very nicely. Unfortunately, I didn't see any opportunities I really wanted to trade in here. While prices are moving down, they are overlapping. It's very hard to take any of these trades. Even trades coming off the 21 EMA are finishing as bullish bars. You can kind of see MACD is kind of oscillating in a weird pattern before they finally cross over and push into bullish territory here. You got 9 EMA, 21 EMA that are crossing over. You saw prices continue to chop. They found a level of support off this 200 EMA that's coming up. So after prices push above EMA, I'm just looking for a continuation pattern. I'm looking for prices to continue pushing up before I look at taking any longs. I do start to draw a trading range here. Prices kind of break out the top, breakout pullback. Prices hold as they continue higher. But as prices continue to push up, you see prices really holding the top level of this resistance in this channel. So I'm not looking to go long at the highs here. I'd want to go long right off this 21 EMA. Unfortunately, we don't get any opportunities like that. Second entry long here if there's a trigger above this doji bar, but you get overlapping bars. 21 and 9 EMA are relatively flat. Just wasn't looking to take a long opportunity there. Maybe you scalp out for a point, maybe 2 points. But I wasn't interested in taking anything like that. Once we start seeing this 9 EMA, 21 EMA crossover, where price is most likely to go, possibly to test this 200 EMA again. MACD is showing bearish momentum. We have a new high off the swing as prices come down and up for a first entry long. Then prices continue down and up for a second entry long. We also have this new low down here as prices come up and down for a first entry short. Prices try pushing above 21 EMA and close below for a second entry short if there's a close below this bar. Now I don't have it drawn, but you can kind of see we do have room to the bottom. I marked it as aggressive. I don't like that the bar finished bullish. If it finished bearish, I would have been more likely to take that trade. But prices do continue down. We have plenty of room, so you would have gotten a scalp. And as prices continue down, where are they finding support? Off this 200 EMA. Prices hold there before pushing back up. And now prices are oscillating up and down. 21.90 EMA are very flat. Right off the bat, I was drawing a range. Wasn't looking to take any trades. And as prices continue to form new highs here, that's when I started expanding this trading range that I had. Prices eventually break out the top. Don't get a breakout pullback, but we do get separation between this 9 and 21 EMA. We do get the second entry short that triggers all the way up here, but that's counting this as a new low. So prices come up and down for a first entry short and then up down for a second entry short. That's based off the count, but just based off experience, if prices are this close like this, I just loop it all together. This is the new low. So prices came up down for a first entry short, and then the second entry short would have triggered below this bar. But there's no entry, there's no reason to go long trying to catch stops. You have overlapping bars here. Your order would have never triggered anyway. I started drawing this trading range at play yet again. We got a new high up here as prices come down and up for a first entry long. Then prices come down and up for a second entry long if there's a trigger above this nice bullish bar. Prices not only hold at the 21 EMA, but they also hold at the support level of this channel. So I entered one tick above that bar. I was in and out for a scalp. We still had room to the highs, just enough room before prices came back down. That was my last final trade for the day. Prices kind of continue to chop down below this 21 EMA, but that's really what I saw for today's trading day. A few solid opportunities, a few aggressive trades as well. But if you're patient, you stick to the rules and you stay disciplined, you'll be able to find these opportunities, take these trades. This overnight high here never really came into play again, so didn't really have to worry about these overnight highs and overnight lows. But we'll see what prices continue to do. Just kind of peeking over here at the daily for a second. Over the past few days, prices have really trended down, and now prices, at least today, have been pushing up. Do they reach all the way to the 21 EMA on the daily? Maybe not. I think we just get a little bit of correction before prices continue down. Or we just continue to see prices oscillate up and down and find a new level of support down here. But that's what I see on the daily. Every now and then I'll take a peek at it just to give myself an idea of what to expect the next few days. But anyway, that's going to be it for today's video. I appreciate all of you for watching. If you enjoyed this video, please leave a like, subscribe to the channel, turn on post notifications so you know exactly when I post this content. You guys are awesome. Strive for excellence in all that you do, and I'll see you next time.